Hey there everyone, and welcome back to another video, and today we're talking 3D printing of all things. Now this is a field I don't know much about, but I did quite a lot of research for this video, and if you want me to keep doing videos like this, please hit the like button and subscribe if you want to support me. Now I was inspired to do this video when I did some research on ARK which is an ETF provider, and they do some extensive research on some disruptive technologies for their ETFs. Amongst them were one that I mistakenly didn't cover, their 3D printing ETF, which I'll come back to later. And 3D printing goes under industrial manufacturing and automation of that process, which is one of my 3 big investing ideas. So that's why I think this is a really interesting space, and anything that can make manufacturing automated or more efficient or more reliant or precise, I think is a great space to look for investments. Now there will be timestamps in the video descriptions. You can skip ahead to any part of the video. I'll first talk a little bit about 3D printing, but if you want to skip over that, you can skip right ahead to all the stocks and the good stuff like ETFs later on. One note before I start the video is that not only are companies that produce 3D printers and the software needed for them going to do well if the technology does well, but so will the companies that are able to adopt this technology. So as with anything, you have you have the picks and the shovels, then you have the gold mines and the gold miners, right? So if 3D printers are the picks and shovels, they're also gold mines and gold diggers that are going to put 3D printing technology to good use and make money that way. So don't just look at the stocks that are involved in the technology itself, but also the companies using them. Now, 3D printing is by no means a brand new technology. It was around already back in the 70s, but it really didn't do much until the 2010s. And today it's used in complex manufacturing of medical devices, weapons, computers, and aerospace parts. Did you, for example, know that General Electric uses it for jet engine fuel nozzles? Boeing for a wide range of jet parts. It even costed a complete cabin once, so the shell of the plane. Ford for engine covers on Ford Mustangs. Nike on shoes plates and cleats. Hasbro for certain toys and toy parts. And even Hersheys 3D prints chocolates. So there are many use cases for 3D printing, and these are just some of the big commercial projects we've seen so far, but I'm sure this is only the beginning. And the development of 3D printing devices and software also might sort of follow Moore's law and will become much faster and more efficient as the parts used in 3D printing like lasers and sensors and computers becomes more powerful. So I think we will see the power and capability of the printers go up and the price will go down. And lowering of prices will accelerate the development. So you could see a development just like we see in computer chips that just continuously getting faster and cheaper, and that spurs on even more developments. Now 3D printing is some pretty complicated stuff, and I'm not going to go into the details of the actual process, but basically the definition is the printing process that builds a 3-dimensional object from a computer added design, which successively adding materials layer by layer, also called additive manufacturing. So it's basically computers making stuff from and with stuff. So a computer either adds materials or extracts materials and is at the end left with an object. It's usually using special metals or plastic to achieve this. So that's the very, very basics of 3D printing, and that's all for the boring talk. The stuff on the iPhone is going to be more important than the object itself. So I can definitely see a development like that in the 3D printing market. So let's have a look at the main players. Now, as you might have guessed, there are not many of them. I'm going to cover 5 or 6. Maybe you get a bit of a surprise at the end. And if you want to see deeper research than I am doing, go over to ARK Invest, check out their 3D printing ETF. The companies I'm going to cover are all publicly traded companies, so you can invest in them, but they are small and they're in a very young, small and volatile space. So there's going to be some atrocious numbers from some of them, so don't be expecting Apple or Johnson & Johnson kind of balance sheets. So take everything with a grain of salt here, and you got to look for the positives. There's no big, well-established player here. These companies are all very small, so they're risky, but the potential upside is strong for these ones. And for my information, I'm going to use Stock Rover's research report, which is a website I've newly started using. So they produce one report with all the numbers you can imagine, and I'll link to each report for all of the companies in the video description, so you can go and check them out for yourselves, because I'm not going to sit here for an hour going through every metric and every number on the balance sheet. So we are starting off with none other than Proto Lab, ticker symbol PRLB, market cap 2.2 billion, revenue only 45, but that's pretty big in this space. So it's a 20-year veteran and is pretty much the leader in 3D printing. And as most of the other companies, it specializes in medical devices, aerospace, and automotive. Those are really the industries they hone in on. And it specializes in sheet metal fabrication, injection molding, CNC machining, and 3D printing. So these companies are not just doing 3D printing, they do all sorts of autonomy of manufacturing. Now over to the numbers. Now let's get quickly through them, but for the first one, I'll quickly explain the numbers very, very simply. So it has underperformed the S&P 500, which is an index, by 37% over the last 5 years. So the total return has been 16%. The price to earnings ratio, so if you take the stock price divided by earnings, it is 35. Price to free cash flow, which is the money they're left with after all the expenses, 42. So it's 42 times the free cash flow. And the price to book, which is their assets, is 3.8. The higher these ratios are, the more expensive the stock is technically, but they're not that important. The gross margin is 51.3%. The net margin, which is what they're left with, 13.9%. Return on equity, so when you give them money, this is how much they get out of it, 10.9%. Sales growth over the last 5 years, 78%. That's an annual growth rate of 14.8% over the last 5 years. That's the revenue growth. The net margin growth has been 8.2%. That's annual growth rate. The annual growth rate of cash has been 18.7%. And the value score is 65. The quality score is 79. The growth score is 93. And sentiment 56. Sentiment is the peer review and analysts. Value is how high the price is. Quality is the numbers for the company, so how financially sound the company is. And growth is simply the growth rate. Next up is 3D Systems, ticker symbol DDD, market cap 950 million, revenue 629. This is the world's oldest 3D printing company, and it sells the actual printers, so and the software needed to operate them. So this is pretty much a pure play for 3D printing, and it's sort of owning picks instead of the gold mines sort of play. Now it has underperformed the S&P 500 by 22% over the last 5 years. You got a return of negative 72%, atrocious. Forward PE is 100 plus. Price to free cash flow 100 plus. Price to book 1.8. You've got a gross margin of 44.2, net margin negative 11, return on equity -13%. Sales growth has been over the last 5 years -5%, so that's -1.4 each year. Net margin has grown -43 every year, and cash has grown -3.7. Value score is 65, quality 52, growth 39, sentiment 79. So this is some pretty atrocious numbers that you normally don't see in many companies. Next up is one company you might have heard of from Catherine D. Wood over at ARK Invest, because this is her favorite, Stratasys. Ticker symbol SSYS, market cap 875, revenue 636. So this is a 32-year veteran which specializes in additive manufacturing, and it makes the actual printers for 3D printing, and it specializes in healthcare, automotive and education of all things. So they sell the actual printers, and they've underperformed the S&P 500 by 119%. So it has given a -68% return. Forward PE 35, free cash flow none, price to book 0.8, gross margin is 49.3, net margin -1.7, return on equity -0.9, sales growth last 5 years 32%, revenue growth has been -2.2 annually, net margin -70 annually, and cash flow 4.6%. Value score 54, quality 55, growth 46, and sentiment 43. Moving on to Materialise, which is actually a Belgian company, but it trades on the Nasdaq. Ticker symbol MTLS, market cap 992, revenue 211. These guys specializes in helping companies improve their 3D printing process. So they provide software and a device. So this is a bit of a different play, and it's an international company, which makes it a bit more interesting. Outperformed the S&P 500 by 114%. So you've had a 158% return last 5 years. PE is 100 plus, free cash flow 73, PB 6.6, gross margin 55.6, net margin 0.4, return on equity 0.6, sales growth last 5 years 88%, revenue growth 22.7% annually, net margin 10% annually, and cash 17.3, value 50, quality 65, growth 91, sentiment 29. These are some pretty impressive numbers actually. It's a very expensive stock, but there's a reason for it. The company has done absolutely fantastic. And on the end here, I'm actually going to add a non-3D printing company. It's going to be Autodesk. This is the company that provides software for the architects, designers, and engineers that actually uses 3D printing to print stuff. So if something is 3D printed, they have used design and 3D software from Autodesk. This is obviously a great company, and it has outperformed the S&P 500 by 139%. You've had a 187% return. PE ratio is 100 plus, free cash flow 29, price to book is none. Gross margin 90%, net margin 6.6, return on equity -146. Sales growth last 5 years 27%, a little bit disappointing. Annual growth rate for revenue 5.4, again a bit disappointing for such a great company. Growth rate of cash -18, so not much cash left. Value score 54, quality 80, growth 84, and then sentiment 89. So this is a fantastic company with solid numbers. It's software as a service, and it is also included in ARK Invest's 3D printing and industrial innovation ETF. So this is sort of a no-brainer, but the numbers are not that impressive. So I would definitely like to see a software company post a lot better numbers and be a bit more financially sound, because it's quite easy to make money with proprietary software, and with high margins it should be able to generate more cash than it is. So of these 5 companies, Proto Labs, Autodesk and Materialise crush the rest in terms of numbers. And if you want to take a speculative bet on a 3D printing company, I would definitely go with the one posting the best numbers, because you probably don't know much about this space, and unless you have inside information, I would just go with the safest bet. In other industries, there are more to choose from, so you can do some more digging. And who knows, the other companies might have stuff in the pipeline, but you should never bank on that. So personally, I would probably go with Proto Labs or Autodesk. I know Autodesk is not 3D printing, but it's quite intertwined. Or I would go with some of the ETFs that I will cover. Now, of course, ETFs are just like stock funds, but they're traded like regular stocks. And the only company offering 3D printing ETFs is our old favorite ARK Invest and Catherine D. Wood. So the first of 2 ETF is ARK Invest's 3D printing ETF, ticker symbol PRNT or PRINT. It has $25 million under management, tiny little ETF, expense ratio 0.66, and it had inception in 2016. The top holdings are Proto Labs, Exxon, Strawman Holding, Rainshaw, Stratasys, HB Inc., MGI Digital, and Materialise. So this is pretty much strictly 3D printing. The other one is going to be ARK Industrial Innovation ETF, ticker symbol ARKQ. This is all about automation of manufacturing. It has $161 million under management. This is one of their flagship ETFs. Expense ratio 0.75, and it had inception in September 2014. The top holdings here are Tesla, Proto Labs, Xilinx, 2U, Stratasys, Materialise, Autodesk, Teradyne, AeroVironment, and Splunk. So this is probably the way I would invest in 3D printing, because you get some general automation as well and robotics. You know, I think the exciting thing is, in general, the automation of manufacturing and the computers and sensors and robots that carries it out. Not necessarily just 3D printing in itself, because 3D printing is inherently dependent on computer chips, on computers themselves, on sensors, on lasers and robotics. So a 3D printer can't stand alone. That's why I personally would go with something like this ETF or Autodesk, which is sort of like investing in the backbone of 3D printing, not the printers themselves. So that's it. That's my attempt on digging into 3D printing. Now, as always, when I do these videos, I've probably made a lot of mistakes, said a lot of things wrong, and feel free to point me out. But, you know, if I want to do more of these videos, I can't spend endless amounts of time going into each topic. So I'm going to get better as I keep going, but I do apologize for any mistakes I've made. I hope you enjoyed this video. Subscribe if you want to see more, and I'll see you guys in my next video. See ya.